You see, there is an accounting issue because we are in the realms of what is called fair value accounting. So what would have done is if they had forced this kind of swap, because the EPF would have a different profile of securities. They would have more longer term securities. The banks would probably have shorter duration. So I don't have per bond series who owns what. We just know the total. But it's not equally distributed across all the different classes that they classify. So the banks, and I used to be on a bank director for 9 years, so I have some understanding of how that industry works, is then basically spread game. So they get interest income on the interest earning assets, which is mainly lending to the private sector. And then they also hold a fixed income portfolio because by the Banking Act, 20% of their liabilities have to be in liquid securities, of which government securities are one type. So a lot of them, but they're holding much more than the 20%. But the benefit that they get is that when you hold these government securities, which are called risk-free securities, you need to put capital against your interest earning assets. This is zero risk weighted. So you don't have to put capital against the holding of government securities. Right? So you get a huge benefit. Now the question is that since they're in a spread game, if these were reprofiled and they ended up getting slightly lower coupons, if interest rates are coming down, and already it is going to come down. Now tomorrow I believe there is a monetary policy meeting and it's expected that there will be a cut in interest rates and more because inflation is coming down very, very quickly, expected to hit single digits by next month. They could have managed that spread. So if you didn't do this, the shareholders benefited from not touching that because ultimately the residual flows to the shareholders. Now the question is that they have other problems, which is very true because they said that over 20% of the lending book has some kind of stress. Then I also don't agree with this thing that, you know, they have a higher tax burden because they are paying 30% corporate tax like every other company. The 18% financial VAT that they pay is more visible in the income statement because unlike a normal business, they don't get input credit and output credit. The VAT that finally the consumer pays is the same whether it's a bank or a normal goods and services company because it gets built into the cost of interest. You know, either depositor will get slightly lower interest or borrower will get slightly higher interest.
So technically it's not going out of the bank's pocket.
It's not going out of the shareholder's pocket because it's passed shareholders. It's a pass through.
Understood.
So this argument that they have a very high tax burden, I don't agree. And I also don't agree with the fact that the EPF has a lower tax burden, superannuation thing, because the average balance of an EPF holder is only 1.8 billion. If you take the total and divide by 2.5 million. And probably it's skewed towards 90% of the people probably have small balances. You have very rich people and older people who probably have much higher balances. So when you look at that, you need 185,000 rupees monthly income to get to a tax rate of 12%. If you say that the superannuation funds are pass-through vehicles, most of them would have anyway been below that 12% tax rate. So I don't agree that they have a tax advantage. And I also don't agree that the banks are excessively taxed. Now, they do have an issue with their lending book and COVID, etc., and moratoriums were given. Actually, if the moratoriums were not mandated, they would have anyway had to give these moratoriums, right? And they got regulatory forbearance that they didn't have to impair. So there is no easy solutions to this. You know, the actual thing lies somewhere and some compromise would have to have received. So my sense is that if we extended, and then outside the bank, so many other people got left out, including individuals who made very, very high returns.